President likes to brag about the fact he doesn't pay attention to the markets, criticize his predecessor for obsessing over them. This week it might have been a good idea, but what do you make of what happened?
Well, I'll point to the Dow Jones Industrials, right? So the Dow Jones Industrials, we're looking at the lowest close since November 2020. So that essentially wipes out the last 2 years of gains. And as you mentioned, we did have the Dow Jones. Yes, we bounced off those bear market levels, but still you're close to 20% down from recent peaks, and you're close to joining the S&P 500 and the NASDAQ already in those bear market levels. Now, tech stocks were also staring down their worst 2 weeks since COVID started in March 2020 here, Neil. So all the major technology giants down double digits. I'm talking about Apple, Microsoft, Amazon. And by the way, with Meta, formerly known as Facebook's plunge so far this year, you know, Mark Zuckerberg has lost over $73 billion in personal wealth so far this year, and that has sliced his wealth by more than half. Now, you shouldn't cry for him because he's still worth $50 billion or so. But Zuckerberg's Meta joining the list of other companies reportedly cutting staff and headcount, losing around 10% this week. Now, we know that Snap, Coinbase, Peloton, Tesla, Carvana, JP Morgan, and Robinhood are also among the names that are laying off workers. Now, for now, the jobs market broadly is still strong. You still have 2 jobs for every applicant, but there's talk that there will be a catch-up effect, and it's also not a good indication for the direction of the economy if you're losing these high-paying, white-collar jobs. Now, the main concern, of course, globally is what the central banks are doing, and the Federal Reserve being very frank and stark this week that they are going to cut and raise interest rates, to levels where they can finally cut down and kill 40-year high inflation. Add to that the concerns over in Ukraine, Neil, and also what's happening with the stock market turmoil. And that's why Goldman Sachs predicts another 2% down from here before this year is done.
You know, Susan, well, I have a quick question, and you and I have gotten into this whole idea that there's a disconnect between how some of these technology stocks are doing and how products are selling. Apple, you're very in key with Tim Cook, the CEO, and of course, they've had a very, very strong response, and you were covering the long lines for these new Apple iPhones that are out, some of which cost over $1,000, and they're selling like hotcakes.
Right. Yeah, and consumer sentiment levels are still at pretty elevated levels as well. But there's going to be a catch-on effect, and there's a debate about whether the equity markets have it priced out better than, say, the bond markets, because you're getting the highest yield now on those 10-year government bonds in almost 11, 12 years. So there's a thinking that consumer sentiment will eventually be hit. How long will they continue buying those high-price items? You know, we still have technology earnings in a month's time, and people are predicting that Apple could still outperform by 6%, but that's not necessarily the case and not uniform across Silicon Valley.
All right. Thank you very much, Susan. Well, as we